I like to contour my conversation based on the crowd. So how many people here are entrepreneurs or want to be entrepreneurs? Oh, fantastic. Okay, perfect. How many people here are investors, angel investors, or maybe corporate investors? Show of hands. Fantastic. Okay, so you've come to the right place. You will not be wasting your time. As we go through these slides, and I think I need to just tell people to help me with the skipping of slides. So Techstars, very, very quickly, we are a global accelerator. Today I'm going to tell you about how many accelerators we have, not only in the United States, but across Europe. And hopefully, if I do my job properly, we will have accelerators here in the Middle East, North Africa region, what we call emerging markets. Here you get a little bit of who I am. I've been an entrepreneur for, thank you. I hate to say this, 33 years. So yes, I am old. I started my first company when I was a 22-year-old engineering student in college, electrical and mechanical. It was a software company. It happened to be in security. And at the time, I wrote kernel mode code. So for any programmer out here that knows how to do assembler, I'm one of those really, really ancient technologists. That company went on to be sold, and 15 companies later, 2 which IPO'd, and a couple that were very spectacular failures, here I am. I also do angel investing. I also do mentoring. So in my personal portfolio, I look for companies that I really find interesting, and I write a check. Maybe I write 2 checks. Some of that money that I've written, by the way, hasn't gone anywhere. I have stock certificates that are ugly pieces of paper that I could cover my walls with. And a few of them have been fantastic wins. So angel investing is it's a little bit like going to Las Vegas or Monaco. You're going to have a lot of fun. You might actually cry yourself to sleep at night. But it's a good way to see the dream and the passion of a young person that has an idea that could possibly change the world. And if you can play a small part in that, either as a mentor or an angel, I'd encourage you to do it. I do what I do, not only for Techstars, but also as an investor, because I am obligated to help every entrepreneur get the opportunity for what I have had. Okay? So Techstars is founded on one premise. It's all about the entrepreneur. And the important aspect of Techstars is we give first. So every one of our executives, every one of our employees will gladly help any entrepreneur with any problem, any question, to help them be successful. A couple of background points on the company. We were founded in 2006. That was only 8 years ago. And what we have today is a 3-month program that focuses on developing the entrepreneur's idea, the entrepreneur's team, the entrepreneur's traction in a market, and ultimately how that entrepreneur tells their story to a room full of investors. So if everyone was over on the other side of this wall earlier today, imagine that room, that size, filled with accredited, qualified angels and venture capitalists. We want to put entrepreneurs up on a stage like this and give them the ability to tell their story to that type of a crowd. Okay? That's what we do. Oh, I should have, let's see. If I go back, we have 2 types of programs. We have a city program. This is a generic accelerator where we take any kind of technology. We also have partner programs where we are very vertically focused. So for example, if you come to San Diego, California, the accelerator there is robotics. We do that in cooperation with Qualcomm. If you come to Detroit, Michigan, that's an automotive mobility accelerator in partnership with Ford Motor Company. If you come to New York or London or Tel Aviv, you're going to be doing an accelerator in fintech in partnership with Barclays Financials. Okay? So 2 types of programs. Little repetition. Today what I can announce is we have 18 accelerators across the United States, the UK, Germany, Tel Aviv, and I'm going to jump the gun here. In 2 days, we will make an official announcement about South Africa. Okay? So the process is starting. We have 4 unannounced programs that in the next 90 days, if you keep your eye on the Techstars press releases, will describe who those are. I actually missed one. I mentioned Tel Aviv with Barclays. In Los Angeles, we have Cedars-Sinai Hospital, which is a big research hospital for mobile health. The one that I missed is, anyone here know Target stores in the United States? Okay. Target is going to be our partner for retail technology. So that's actually quite exciting because more and more retailers are looking for ways to utilize the smartphone as a tool to get more customers and drive more profits, revenues and profits. Every year at Techstars, we're on pace to open 5 to 8 new programs every single year somewhere. We'll either do that in a city or with a partner. So imagine this, if we're at 18 programs today, plus another 4, plus another 5 to 8 every year, and each program takes in 10 companies, we push a lot of companies through our training every single year. And this page, I think, tells it all. What we do works. We've had a total of 660 companies go through the program. That's a pretty impressive number. Interestingly enough, 89% of them are still here, or they've been acquired. And in fact, if I dig into the numbers a little deeper, of all the companies that have gone through, it's a little higher than 660. We've had a 15% failure rate. So let's appreciate that for a moment. That's actually fairly low in the investment game. And failure, by the way, as disappointing as that can sometimes be, it's an opportunity to learn. So I would ask everyone in this room to ask yourself, if you meet an entrepreneur who has failed, is that a good thing or a bad thing? And I'm going to argue that unless that individual you're talking to doesn't learn, is a little too arrogant, right? Those are the outside cases. Failure is not a bad thing. It gives you the opportunity to learn something. And I have a saying, if you've never failed, you are not trying hard enough, right? So you have got to push the envelope of your startup, or for that matter, your investments. I don't want to invest just in people that never take risk, because I'm looking for a return. I'm looking for an obscene return, which means I need someone to take risk. Every one of our companies to date has raised, in aggregate, $1.8 billion. That translates to about $3 million in Series A for every one of our companies. Why would an investor, a venture capitalist, put money into a Techstars company? It's because they know that that young entrepreneur has gone through a rigorous process to understand how to build that business, how to tell that story, how to focus on getting results. Therefore, the money they write is de-risked. Okay? It's a better bet. Now, interestingly enough, that entire portfolio today is worth about $4.5 billion, paper value, admittedly. If I add in the number of companies that we own through our venture capital fund, that number jumps to almost 45 billion. And what creates some of that increased value is we made a very early investment in a young founder who had this idea that in the sharing economy, you could have your own limo service. It's called Uber. So getting in early on that deal created huge returns for the Techstars Venture Fund. If any of you are interested, that URL that I've got up here at the bottom of the screen is where you can go find our results. So if you go out to the Techstars webpage and look for results, we give you an absolutely transparent view of what company, what year, what location, are they still in business, how much money did they raise. Okay? We are very transparent. Something we're very proud of. So about 3 months ago, and you're going to meet some of my colleagues, my teammates, we partnered up with Up Global. So if anyone here has heard of Startup Weekend or Startup Next, that is now part of the Techstars portfolio. And the fantastic story behind this is that we now have the ability to meet the entrepreneur day one when they're just thinking about, do I really want to be an entrepreneur? What does being an entrepreneur mean? Startup Weekend helps somebody figure that out. Now, you might go to one Startup Weekend event. You might go to more than one Startup Weekend event. And if you choose not to be an entrepreneur, that's not a bad thing. Okay? But we'll find you at that event. We'll help you see if you can get passionate about your idea. And we'll take you all the way along the journey from the Startup Weekend event to the Techstars Accelerator to a venture capital financing. And what you do at that point is all up to you. So just a few points of Startup Weekend. My colleagues will do a heck of a lot better job than I will. But what I want you to do is focus on the numbers that are up there, because this organization has created a tidal wave of awareness all around the globe, right? 6 continents, 120 countries, over 20,000 entrepreneurs have experienced Startup Weekend. And as I was standing out here in the hall waiting for this conference to start, there was a young man that came to us to actually talk to one of our colleagues. I believe he's Iranian. His comment was, Startup Weekend changed my life. Now, how incredible is that? If you let that sink in, I think that's a fantastic place to be, right? So that's the kind of stuff that we do as an organization. And I'll let my colleagues talk a little bit more about that. I get this question from entrepreneurs. What does Techstars look for? These are my words. We actually have a playbook in our organization that uses this concept, said a little differently. But it's about team, team, team. I can't emphasize team enough, right? Nobody does this type of work alone. If they tell you that, run the other way. That's not someone you want to invest in. Right? You want entrepreneurs that can share their idea, convince other people to come on board, and build a team. The next thing we look for, and you heard this comment made by Steve Blank, it's product market fit. Right? Is the market interesting? Is it big enough? Because if it's not big enough, from a venture capitalist perspective, it may not be worth investing in. That doesn't mean it's a bad idea. It just means you won't raise venture capital money. You could raise angel money. You could raise friends and family money. If you're in the U.S., I'm ignorant of how it happens here. You could max out your credit cards. You could deplete your savings account. You could cash in your retirement plan. You do whatever you have to do to get your business off the ground. But if the market's not big enough, think about how you're going to raise capital. The word progress, you can substitute traction. So we like to find entrepreneurs that are focused on executing their business idea. Can they find customers? Customer doesn't have to pay per se in the early days. The customer just needs to use the product, provide feedback, and be a supporter of the company. That's good enough. And if it's a big enough market and you've got customers that keep saying positive things about the company, that's a really interesting sign. And then lastly, the idea. Everyone here familiar with the word lemmings? That fictitious animal? Venture capitalists are lemmings. We like to pick the thing that everybody is looking at. So in the United States today, as an example, if your startup is in ad technology, that's an over-invested vertical. So the odds of finding a deep pool of venture capital is not so huge. Not the way it was 3-4 years ago when ad tech was really hot. The other example I use is solar energy, over-invested segment. So the idea needs to be an idea that is cutting edge. It's getting everybody's attention, and that helps to drive people that we put in these demo day sessions, investors that we place in these demo day sessions to invest in those kinds of companies. Okay? The program in action, just a visual to give you an idea. Over on the right, you see what that demo day session looks like. Okay? And Ozan is saying, Ed, shut up and get on with it. What's the value to the entrepreneurs? Really easy. You become part of a global network. You have access in your accelerators to over 150 mentors per class, but overall, over 5,000. And it's not just the mentors, it's also your fellow cohorts that have gone through these accelerators anywhere in the world, right? So it's like going to an MBA program. You're part of our organization for life. So we're proven, we're scalable, we've got an awesome network. I think it's one of the most outstanding in the globe. We drive the #1 global accelerator today. So I thank you for your time. If you have questions for me, now's the time to ask. Yes, sir.
Thank you. Questions?
When I talk to startups that got funded...
If you introduce yourself...
Yeah, okay. My name is Sertaç Çakın. I'm an investor, and I just invested only in Connected to Me, actually, last year's winner. These guys, I'm trying to help them as much as I can and trying to learn as much as I can. So I have a question for them. When I talk to founders of the startups that got funded by Techstars, I hear that your approach is a little different than 500 startups and Y Combinator. I mean, can you tell us more about what you're exactly looking for and how the process goes when you start talking to them and they start pitching to you? And what makes the approach different than the others?
Yeah, so thank you for asking that very provocative question. Where's Hassan? He's in here somewhere.
I would ask it if he hadn't asked it.
Let me see if I can do this diplomatically. The business model for 500 startups and Techstars is a little different. We come at the challenge of the entrepreneur first through the accelerator, and we focus on the quality of the team, the size of the market and the idea, and we want to see if that entrepreneur can actually get some traction early through the process of the accelerator. We do put a small amount of investment capital into the companies, roughly $120,000 for a small percentage. And if they make it through that process of 90 days, which most of them actually do a pretty good job, some even pivot midstream, they have an opportunity to apply for some venture capital funding from Techstars. So we start with the accelerator, we move through curating the idea, really proving it out, then actually writing a check if it's appropriate. I think of our colleagues at 500 Startups, and by the way, we do cross-invest in companies together. But 500 Startups for me is primarily a venture investment firm who also has an accelerator. And so their model is just a little different. Hassan, I think you have one accelerator in Mountain View, yes? Or there may be more. Again,
I think there's one in Mountain View and one in San Francisco, right?
want to give you fair share here.
Yeah, sorry. So 500 startups. I run the MENA region for 500 startups. Hi, Hassan. We have Turkish partners, so ask them for money, not me. So
how many accelerators?
So we actually run 4 programs per year, one in San Francisco and one in Mountain View, and they alternate, but they're always in Silicon Valley. So actually, so one of the things that we do that's different is, yes, we have a VC fund attached to the accelerator program, but it's just as important. So half our investments are done through accelerator, and half our investments are done through seed funding with other partners and people in the ecosystem. And we do follow-ons pretty much like you're saying. If a company's doing well in the accelerator, we can invest up to $500,000 in the next round when someone else comes in as well.
Thanks, Hassan. You know, he made a comment here that I can't stress enough. We actually chose not to be in Silicon Valley. And remember, I said the initial thesis of Techstars is great entrepreneurs, great ideas, they're all over the world. So there's enough great resources in San Francisco and the Silicon Valley area. There was no need to go back and duplicate that there. So thanks, Hassan, for being a great business partner. Another question.
And the last one before everybody jumps in.
Yeah.
Thank you. Hello, I am Amir, coming from Iran, from Avatech Accelerator. By the way, you mentioned something that I have to stress it. Like 2.5 years ago, I attended the first startup weekend in my life, and my life was changed as well, as I'd like to say to you as you told it. I'm coming from a young accelerator, and the pioneering one in Iran actually. We started last year. It's pretty easy. It's rather easy to get the success stories and the good things that most of the people do in their experience. I want to ask you about the mistakes, at least the big ones in terms of short time we have here, you did at Techstars that if you would go back to some years ago, you wouldn't do them again. Thanks.
That is a very good question. Wow. You might actually have a puzzle for me here. I think if we had to answer that question today, probably the one big mistake is we didn't expand fast enough. We really should have had not 18, but maybe 36 accelerators. We didn't know what a great idea we had until we actually started. And then we were actually slowed down by not having fast enough access to capital. So I think now on reflection, one of the questions we're asking today is how do we get into more markets faster with a venture component? And my job is to do exactly that. So in the next couple of years, I'd like to see us double the number of accelerators. I'd like to see us have a venture fund in various regions around the globe. We have one in the United States now. It's about 150 million. We have another one in Europe that's about the same amount. I'd like to see something in this region that's also in that same range, 150 million. So we could have grown faster.